Hello again, and this is me, Vincentas Grinius, and we have today the last webinar of this year. And today we're gonna talk about what drives IPv4 demand in today's market with my very good friends, Mr. Mike Burns and Mr. Jakebrander.
Hello.
Hey, Vincentas.
Hey, it's always good to have a conversation with you guys. We always find the new ideas that actually turns into something really great and great in terms of the community as well. So I think that we definitely have a very good conversation today. We're gonna give some food for our audience thoughts. And perhaps I would like to start from Mike's comment, and then perhaps Jake will chip in. Where do you see IP transfer market is heading today, and what factors do you think affect that direction?
Well, really, the direction is affected mostly by the demand that presents itself. And right now, the demand, the buyers and consumers are pretty much the same as they've been for a while. I saw some recent information today that said that web hosters still are buying slightly more than cloud providers. And then, telcos are up there as well. And then you've got VPNs and data centers all buying addresses now. Sometimes the categories get blurred, between web hosters or telcos, ISPs. A lot of them do the same things. But mostly it's there are still large cloud providers buying addresses. And I think that in the coming year, people will start to appreciate the current value proposal of IP addresses at their pricing levels now, which are quite low. So I expect pricing to come up next year. I don't expect much of a change in demand, but we're hoping that demand will come from some areas that haven't really manifested yet, such as data centers driven by AI and investment in American, ISP expansion through a federal program.
Jake, what's your take? Do you agree with Mike?
Of course, yeah. Mike has a very good pulse on the industry. Demand is certainly, from our perspective, demand has actually picked up quite a bit as well. In terms of the last 6 months, the amount of transactions we're doing has increased probably by around 30%. And then the subnet size has also increased. So beginning of the year, we were doing a lot of small and mid-size ranges. And then towards the end of the year now, we've been doing a lot of mid-size to large ranges as well. And this year, I think the demand was highly skewed by the hyperscalers. I think they were a little bit less involved this year than most years. So the lack of their, I think, activity this year was counterbalanced with the other smaller companies that were kind of getting back into the market, which helped us sustain a lot of activity and also help sustain the price point that was quickly dropping at one point and is now kind of stabilized. That's what we're seeing.
Right. Okay. So what do we have into this market? Basically, is what we see is a pretty stable. And if you can see, IPXO made a new IP transfer statistics. So we see that the volumes of IPv4 addresses are more or less the same, Also the same buyers that actually hyperscalers be trending owners of a market, let's put it this way. And then what we also noticed that it's a slight increase this year on the rest of the verticals that acquiring IP addresses. And that, of course, might, and Jake, correct me if I'm wrong, but this might be also influence of BEAD program that is going to be active next year. And of course, the low price of IPv4 addresses also drives the market to acquire more IPv4 addresses.
Yeah,
Yeah.
I would point out that there's been a disparity in pricing, which the larger blocks having a much lower per address price. And I think that towards the end of the year, as Jake pointed out, several buyers started to appreciate, the value of the low price, and the ones that had the resources and ability to buy addresses have started to do that. As far as, the general increase in, I think that the volumes have been largely the same in the small to mid-sized blocks, and the price hasn't really changed as much in those blocks. But the difference is in the large blocks where the low price really has driven a lot of acquisitions. As far as the BEAD program, I think Jake is the master of
that. Yeah, so we're pretty heavily involved in the BEAD program, as most people know. We publish a lot of data on our website. We've got a BEAD dashboard where anything related to BEAD is constantly being published. Every couple of days seems to be an article. And what we found was in the beginning of the year, the Trump administration actually stopped the BEAD program from being released. But when it first started in about February, there was a lot of demand coming in from our ISP customers who quickly wanted to spend the money that they received. And then that program was quickly shut down. Obviously, the Trump administration wanted to create a fair playing ground by also allowing wireless ISPs and then satellites to participate. So now that that's been all worked out, basically we're now moving into next year looking at a program that was essentially going to put out $42 billion is now only putting out $20 billion. And a portion of the funds will now be allocated to satellites. I think it's roughly around 20% went to satellites and wireless ISPs. And then the rest is still going to, traditional fiber providers. And because we play so heavily in that space, as in most of our customers are internet providers in like rural communities, they're already telling us that they're anticipating receiving millions of dollars of funds. We're already getting a lot of people that are saying Q1 is going to be huge in terms of demand and also potentially turning the market around actually, and maybe even starting to see less availability of IPs than we have in the last, let's say, 2 to 3 years. So it's going to be an interesting Q1, that's for sure. And it's all really going to be driven on how quickly BEAD is released, which states actually release it. And then those two factors also play a key role because they're not all, every state has a different, policy. They're going to be releasing it at different times. So it could be released in the first 3 months, could take, a year or two.
And that's probably the BEAD recipients are generally going to be smaller sized, and so they're not going to be out there buying 12s and gigantic swaths of IP addresses, but they're going to be buying 16s and smaller for the most part, and so that's really
or leasing
or leasing. Yeah, I'm not sure, Jake. Maybe whether they can use the funds for leasing. Sometimes. I don't really know if there are strings attached. I know there are audits attached.
It's all based on telecom expenses. So whether you're buying internet connectivity or gear or IP addresses, as long as it's related to network, I think it's all kind of bunched together. So leasing should be a fair in terms of spend.
Should be on the table.
Okay, so we talk about the rural areas and the telco space. Correct me if I'm wrong, but actually I see that IPv6 and the whole dual stack, that was, I remember, Mike, we spoke back in, when was it? It was like 9 years ago when we spoke about the dual stack on IPv6 back in Austin. And many of the community guys said, "Oh, IPv6 is on the horizon. It's gonna overtake everything and replace IPv4." Well, the sad true is that IPv4 is still is a critical resource, and IPv6 and the whole dual stack is basically stalled.
Yeah, I'd agree. Just, the basics of dual stack back in the late 90s and early 2000s was the idea that the way to transition to IPv4 was to get every device using both protocols, and then you can shut one off without any kind of cost. And that was really kind of a stupid proposition because that left no real business case for moving to IPv6. However, the dual stack approach has been really the only fully functioning approach for a long time. Now, however, there are certain translation technologies that are more capable, and for that reason, along with probably the cost of IPv4, dual stack is not really in the picture as much as it has been. It's more, there's a push for smaller ISPs to try and go with just IPv6 alone with some kind of a translation box. But I think in most cases, the way that dual stack was implemented used NAT as part of the IPv4 stack anyway. So you were having network translation in that dual stack mix, and there really turned out to be no real incentive for going dual stack. All it did was offer a new attack vector and a new set of technologies to master and to protect your network against.
And it's very important to note that dual stack also introduces the additional layer of the costs for the licensing. If, for example, you want to enable on your router the CGNAT, you will have to invest into the licensing fees.
Well, I think about the fees and the cost to a company that might have sent technicians out to learn IPv6 25 years ago. And they've been paying these technicians to maintain that knowledge and the equipment. And 25 years later, you could run the same thing on IPv4, and there was very little value to that career spent in IPv6. That's the real cost.
So I think that by the end of the day, IPv4 definitely will gonna be the major resource of the internet and the whole routing until someone will not invent a completely different approach, replacing the whole IP type of logic. In my view.
And I'll add something. Most of our customers are ISPs, like a very high percentage. I would say 60%, 70%. None of them use V6 to build network. Now, some of them will dual stack because you have to do that, but none of them purely build V6. None of them want to use V6. And in fact, V6 does have an application. It's not all bad in the IT side, right? So it's very well used in other areas of internet. But when you're talking about building fiber and infrastructure, V4 is by far the most desired protocol. And then even if somebody was to try to undo V4, right? They wanted to move to V6 only. Any network provider, it would take decades and billions of dollars to undo all of the work that they did building network in the last 20, 30 years. And then it's almost impossible. And then if you're one of the network providers, right, even if you built or rebuilt your whole network for V6 or dual stacked, try to force your customers downstream to use V6, now you have the same problem with them having to redo their whole network. And then maybe their customers and their customers, right? So you've got like 5 levels of separation to worry about if you want to force your customers to use V6. So it's almost impossible for V6 to ever become anything more than just offloading a little bit of the traffic.
You know, I do not want to be sounding like a grumpy man, you know, or ironic, but you know that image where, you know, the two teams were built, you know, one bridge and
yeah.
so it's that's actually how it looks to me right now, because you know, you had, on the other hand, you had IPv4 and some probably related, you know, internet guys thought about IPv6, but they haven't thought about backward capabilities.
Yeah. Well, you know,
and they're like, oh, wait
well,
a minute.
there, really, the reason why we still have IPv4 in the dominant position is 100% due to NAT. And when IPv6 was designed, it was called IP Next Generation at the time. NAT wasn't really a thing. And it was basically going to come to a hard crash really soon. We had just recently gone to CIDR addressing and made address allocations more efficient, but it was really NAT, a multi-level NAT, carrier grade NAT, that have brought us to this point 25 years later, where the routing table for IPv4 is really not even growing substantially, and the price for IPv4 addresses has been dropping. So if you put those two things together, it doesn't seem like there is an overwhelming, you know, need that is not being met by the existing IPv4 numbers.
Yeah, absolutely. So look, let's put aside all that history. Let's look at more modern and today's technologies. Let's talk about AI. Everyone's talking about it. We have to talk about it too. to catch YouTube trendy keywords from our
Yeah.
no, I'm joking. But
Well, tell us about your AI girlfriend. That ought to get some clicks.
Interesting, Jake. Tell us. Yeah. So AI. What you know, I learned in today's world about AI that AI is a training model, or thousands of them, and we need a lot of data to be trained. And I see that they actually do a pretty great job. You know, we tested. We had this demo account of Sora, OpenAI's. It's crazy realistic. It's crazy realistic. So basically, AI learned how to mimic the humans, you know, and it basically can do anything with you. You can jump from a skyscraper and then fly like a Superman, whatever. I mean, it's really realistic. But to actually come to that point, you know, all those AI companies and all the search engines and whatnot have to feed the data. Now, how do we feed the data? They feed the data with crawling the internet and basically sourcing and extracting the data to their LLMs, so that they would be able to, you know, have less of hallucinations, do better math at some point, and whatnot. How do you see, from your perspectives, where the internet will gonna take next with AI? Jake.
Me? Oh man, that's a loaded question. I actually I wanted to defer to Mike on this one first, and let Mike.
Well, I mean, I think you've laid out the way AI works pretty well, and in fact, I think the LLMs have largely exhausted the public stores of learnable information, and now they are going after more private information to learn from. And there's even talk about them learning from other AIs, which that's problematic. But insofar as it affects the IPv4 market, we hear so much about gigantic valuations and tons of money being spent on huge data centers and power supplies to those data centers and everything else associated with it. But we haven't really seen an uptick in IPv4 demand that I can ascribe to AI. And I don't know, I think it could be two things. One, AI companies do have partnerships with large IP address holders like cloud providers. So it's possible that they are using some of those addresses as part of their partnership. The other thing is, as you mentioned, if AI is going to learn by web crawling is something that can be controlled. Every website can have a robots file that will limit the accessibility and speed of web crawling. So, to go out and do that and crawl something aggressively is going to invite a response, which is the throttling or the blocking of those aggressive web crawling IP addresses by the holders of the content. They don't want to see their content leaking out to AI without any kind of compensation. So for that reason, the AI companies, if they are going to crawl the web, can't really use the same IP addresses over and over without risking them getting blocked by the content providers. And therefore, we think they need to either rotate or use addresses in a more temporary fashion. If not yet, then soon. And that's where I think leasing might come in, and we might see AI affecting the lease market more than the transfer market.
But I actually I gave an interview to one of the famous network magazine, and I have this kind of thought that the AI and the hunger of for the information will gonna shape the internet's direction to a completely different path, because what they don't want see the advertisements on the websites, right? It's more it's more content and more bandwidth for them to handle, if they're gonna load all those banners. So banners aside, all that we need is the content. And the content, the actual authors and the content creators, they going to monetize that content for those bots. And what I saw, for example, what Cloudflare is developing and already kind of in production, monetizing the content for bots. Unless you don't want to pay for the content, then Cloudflare will give you some Lauren Ipson content. But the idea here is that I think that the whole perspectives on how the internet is going to be monetized will gonna be changed. And what I see, that it's a big risk, in my opinion, for Google, that actually runs, the biggest revenue stream for themselves, their ad network, other big advertisers and whatnot, right? Because content is becoming the actual thing, And if you look at the statistics, over 70% of the traffic that comes to Google is actual bots. Humans is just a small fraction of those searches. So, yeah, you mentioned about leasing. Sure, leasing definitely can help. But what I want to see is that we should allow those bots to operate and understand, which are the bad ones and which ones are the good ones, because humans' behavior on the internet will definitely gonna be changed with all those ChatGPT apps and whatnot, because they want to have the aggregated data. They don't want to research anything. If, for example, your your kettle broke and it's off the warranty, then you want to read what's the best kettle you can get for 2025, right? So you just enter the a single line to ChatGPT, and it will give you the results, on where to buy, right? So I think that those things, the frameworks on the good behavior of the web crawling definitely should be in place. Policies and modern policies should be in place as well. But I definitely think that it's gonna shape the whole internet ecosystem.
The problem
Yeah.
though is there's no way for a website to determine what's good web crawling and what's bad web crawling. If you're hitting a website too much for information, it sees you as DDoS attacking it, right? And it needs to have some sort of a measure to protect itself from going down. So how does it determine what's good traffic and what's bad traffic?
Well, as we say in cybersecurity, any bot leaves a fingerprint. So
Yeah.
there are those fingerprints, and we see those fingerprints as well. We also aggregate a lot of abuse reports, and we see those patterns. How, for example, cybersec detected that this is a bad behavior bot, and whatnot. And of course, you have a lot of footprint where you coming from, what ISP are you using, which location, is your time zone synchronized with the location you are coming from, what is your operating system, what is your browser, you even won't believe how much data you give to every single website when you do a simple request. All what they are missing is probably, your first name and last name, but Google already knows it. So,
Yeah. And when you have all that stuff you mentioned, there are databases that will match that with your first name and last name. So
exactly. And by the way, yeah, exactly. And by the way, I have a webinar next month with Oliver Gasser, head of research from IP Info. So we're gonna talk about all those data sets, and how they detect all those bits and pieces, which is gonna be interesting.
Do you, but then VPNs and proxies come into play. Does that industry grow to help mask all this behavior?
I can tell you one thing, and my opinion perhaps would be unpopular, but in a very democratic world, they are trying to filter the content. And essentially for VPNs, that market is growing like crazy because UK started to do the age verification on adult websites and whatnot. Australia introducing next year ban for the teenagers
with the cell phone.
for any social networks.
Mhm.
Really?
Yeah, I mean, all the democracy world is becoming like, filtered. So you won't be able to browse internet uh, freely anymore. And more countries are actually doing this. By the way, in Germany, they listen to all your traffic, and they actually, will send you a penalty if you will download a pirate movie. So they basically monitor everything. So yeah, it's a new age of the internet.
Well, that's interesting. So instead of just sending a complaint request to the owner of the IP address, now they can identify the actual downloader and send them a
Yeah,
penalty. That's
yeah.
interesting.
So
That's pretty
the
good.
so so the way it works now, we actually getting into deep state things. No, the way it works is actually that every of that, um, how to put it, I'm not even sure, on which level it sits, but they have those honeypots. And if for example, they know that, specifically those users use that service as the most popular one, they actually put the honeypots on on those leechers, no, on uploaders,
Right.
and then they upload, then they actually download, the torrent. They understand that this torrent was downloaded from that IP address. Oh, that IP belongs to, let's say, some telco that is in our country. Okay, then they're writing a letter to that telco. Tell us who's using that IP address. It's under that name. Okay, penalty on the way. So that's how it works.
Okay. Well, a lot of times the ISPs don't know who's using that address because it's
Yeah.
that, and we get a lot of those, but there are ways, as you said, every time you do a request, your browser, your operating system, your IP address, from the IP address, your location, your timestamp, all that stuff, just on a simple get request.
Yeah, on
Gets
get, yes.
transferred. And so there are people out there who just accumulate that information. And when they can tie that particular digital fingerprint to an identity, they're able to do that. So there are services out there that will offer identification for every one of your web visitors. Using
Yeah. Absolutely. Yes.
I thought that's what the
Anyway,
government
we went
used.
too far. We went too
Yeah, we
far.
went too
But
far.
it's all real. But look, guys, it's still connected to IPv4.
Yes, it certainly is.
Yeah. Okay. We touched base on the actual abuse, and we also touched on a BEAD program. Mike, you mentioned about some interesting thing where abuse and BEAD program is related from the police and FBI type of things. Tell
Yes.
us more about it.
Yeah, well, there is a law here in the States, and that's where the BEAD program money is going to flow into companies here in the States. There's a law called CALEA, CALEA, and that law requires ISPs to cooperate with law enforcement. And one of the ways that is required is for ISPs to be able to identify a customer based on the information law enforcement has, which is normally the IP address, maybe the port number, and the date and timestamp of the abuse. And so you're expected as an American ISP, when confronted with a subpoena or request from law enforcement, to be able to comply with that requirement. And what this means for companies or ISPs who use carrier grade NAT it makes it very difficult to identify any particular user with an IP address. Even if you have the port number and the timestamp, that requires that you have some kind of a logging system that keeps track of every carrier grade NAT transaction, basically, a machine of state that the logs can grow to be enormously large, and it's a very expensive proposition.
Mm-hmm.
So when it comes to BEAD, it may be that the recipients of the federal funds pay more attention to the requirements of CALIA, which are otherwise widely ignored. But the BEAD recipients will face federal audits, and we know that law enforcement really likes to have the ability to identify miscreants via IP address information. So for that reason, it may be that the recipients of BEAD choose not to deploy carrier grade NAT so that they can be much more easily able to identify a customer by the IP address. So it's a throwback to the old days, but the CALIA recipients are going to have to be probably a little bit more cognizant of the requirements. And unless they want to spend a lot of money on carrier grade NAT logging machines, the easiest way for them to do things is to simply assign one IP address to each customer. And then they don't have to worry about any kind of difficulties facing subpoenas.
You know, in Europe Union, they have this requirement where you have to have maximum of 64 IPv6 IPv6 routed to one IPv4 address because of this thing.
Mm-hmm.
Because
Yeah.
otherwise you just lost in when it comes to report anything. But again, this is where IP leasing actually removes all that headache, because we aggregate all the abuse reports, and we give this nice view of what is happening with your IP addresses. So that's also a thing to think. Now, jumping into IP leasing, we also agreed to talk about it because it's definitely a big part of the ecosystem. And Jake told me that tell about what risks are associated with IP leasing. So first of all, of course, if you do like a wild west IP leasing, it's definitely gonna be a headache. And essentially, if you leasing a small blocks to many random customers, but when you have a process in place with KYC structure, and then you understand your IP holders' expectations and your IP leases, then you actually are in very good hands, meaning that KYC eliminates around 80% of all the abuse cases. And this is a this is a golden number we always refer, 80%, because that's how much we saw of the decreasing abuse cases once we implemented our KYC processes. But at the same time, what I've learned, that a lot of telcos, a lot of ISPs, infrastructure providers, they're all saying that their IP addresses are spotless and their IP addresses were never abused. But when we actually scanned initially onboarding the IP addresses, we see that, lots of blacklists, active listings, and whatnot. So, and that comes, what I want to try, what I am trying to say is that a lot of telcos have a headache with the abuse. And this is like a fifth leg for them handling that abuse. So, of course, there are abuse departments that handle all those bits and pieces, but definitely what we saw, telcos are not sophisticated on abuse managing, because all what they care is the internet connectivity to the end user that actually pays a subscription, right? The second plan is to kind of keep that network, in a good shape from the abuse perspectives. But the most important thing for them is the uptime. So abuse then moves to even third plan for them. Because in many cases, if you look at the stock exchanges, and I'm sure you monitor some of the telcos as well yourselves, um, the hype of telcos is not there anymore. And what we are trying to do is, keep up with the stock prices. And if their stock prices are no go, means that they have to keep the lean teams of the abuse of the network and whatnot, right? Mike, what's your take on that?
So you're saying that the first thing to go in pursuit of profits in a shrinking pie is abuse reporting and abuse management. And, I mean, that's certainly true. I think a lot of the telcos ignore it largely because they use DHCP pools and they know that that address is going to go somewhere else shortly and the person who's complaining is going to be okay again. And, as IP address owners owners, and we started leasing our addresses out in 2012 when it was the Wild West, and it's a very different thing now. But we, as owners, we get all kinds of abuse reports, and some of them are, ones that we can't really deal with. Dealing with, for example, copyright in a place that doesn't recognize the copyright. But there are others that are quite informative that will tell you whether a certain IP address is hosting a bot, and often those ones do get addressed. Nobody wants to have a bot on their network. So the way it works is, I'm sure it works the same with you. You get the abuse report, and you contact the lessee of the block that contains that IP address, and you tell them, look, you got to deal with this, cut the customer off, or whatever you have to do.
Yeah, I mean, we also get the subscription offers from the blacklist to subscribe to their services. Like,
Right.
why?
I know.
you know.
They almost have an incentive to have more, blacklisting to get people to sign up for their
And
service.
it's like, anti-abuse works abusively.
Yeah,
you
that
know.
can happen.
Yeah.
That's true. It's hard to say, but I would say you're right about it now being a much more clean, open, and transparent system. Your platform, for example, would not succeed if there was too much abuse, that the lessors found themselves reputationally impaired. Obviously, you couldn't grow and continue to grow if that was the case. So
Sure. Absolutely.
I do think people do get scared, when they receive their first abuse report and they don't realize how common some of them are and automated. They usually are automated. But
You
you
know.
have to triage them, and you really have to address the important ones.
Absolutely. I mean, abuse topic is probably the most important from the whole storyline. Usually, introducing ourselves, and we try to keep it simple. We say, hey guys, you put your IP addresses the way they are, and you will get probably the better state of those IP addresses once you take them out of IPXO. By the way, interesting fact that we haven't got much of the cases that IP holders removed IP addresses from our platform. So it means we do something good, right?
Well, it means
I,
you can't be doing something bad.
I wanted to
True that.
touch on something also. We kind of see things from more of a higher level. So we also provide obviously network services, and part of that is leasing IP addresses. And a lot of our IP addresses are leased via our wonderful partner IPXO. And we have noticed a significant decrease in abuse reports since you introduced the verification. However, the problem still exists when you have a company that's leasing IPs and they're a hosting company or a cloud provider or service provider of some sort. It's not even them that's the bad actor, right? It's their customers or their customer's customer. So you still have and that's that 20%, right? You can't stop it
Mm,
because
mm,
you may have a very reputable company that does everything right, and then they can't, they don't even know that their customers are doing things. And just a good example is we were getting spoofing attacks from our own domain. I was getting spoofing attacks from myself to myself, and we recognized that there was a switch we had to make in O365. There was a setting,
mm,
but those spoofing attacks were coming from OVH, and OVH,
mm.
is a massive company that we work
Yeah,
with.
yeah,
It's
yeah.
OVH wasn't the one doing doing it. It was somebody on OVH's platform that they weren't even aware of. So
Mm,
that you really can't stop, unfortunately, and they have to deal with those on a case by case scenario.
yeah,
Yeah,
absolutely,
and a
absolutely.
lot of abuse comes from bots. Individual eyeball consumers can get infected, and then they're going to be spewing stuff out unknowingly. So you're always going to have some abuse on even the cleanest networks, because not only bots, but there are companies that will pay commercial ISP users to share their IP addresses so that they can send mail out as if it was coming from this home, just by sharing the IP address that the home has. So, even know your customer isn't necessarily going to prevent every bit of abuse. And what I think is that, some IP address holders will see the first item of abuse and get very concerned about it. But once they're
Mm,
educated, that usually abates.
yeah, absolutely. So we touched base on IP transfers, IP leasing, um, the new technologies. Um, but in recently, um, institutional capital started to kind of look into IPv4 address as the alternative asset class. And that's very interesting because I think that it's definitely, a resource that is worth, institutional capital. And, their kind of idea is to deploy the capital and make a recurring revenue where you basically combine the IP transfers and leasing market. So, who wants to go first on what is your take stepping the institutional capital to this market?
Well, I do see that. Obviously, I think that the big deal with Cogent, where they raised a lot of money and secured it with their IP addresses, opened the eyes of many institutional investors to like you say, the returns, which are quite high at this point. They're high enough, given the very low price of large blocks of IP addresses, that buying them and then leasing them out can offer returns of 35-40% without too much difficulty. So for that reason, we are actually advising our larger block holders not to sell at this point into such a depressed market, but instead lease the addresses out and achieve these great returns and wait for the prices to recover, which we believe they will.
So in what you're suggesting is basically invest into IPv4 address, monetize it, and then exit at a higher price.
Yeah, unless the returns are high enough to keep going, which they could be as well. We talked about the connection between the leasing prices and the IP address sales prices. They've always been kind of loosely coupled, although these kind of transactions tend to bring them tighter together so that when the prices of one rise, the other might rise as well.
But just one more thing, if we look at the hyperscalers, they actually, set a very high standards for their IP leasing within their cloud. So don't you think that IP leasing prices might go up considering the hyperscalers price tags?
Yeah, I think this is an interesting point you brought up. So Cogent was able to securitize like $172 million against their IPv4 assets, leasing and owning a pool of assets. And it's interesting because we reached out to them in 2019 and made them a fairly significant offer for their IP addresses. Roughly, I think at that point we offered them like $25 an IP, which was well above market rates. And their CEO is brilliant. He said, no, I don't want that. And we didn't really understand it why back then. Now, fast forward to the future, he already knew what he was doing. He was holding on to an asset class that he knew was going to be scarce and was never going anywhere. So that kind of leads to the question of why did IPv4 prices go down at such a rapid rate over the last couple of years, where we know that that they have value, right? It's been solidified that IPv4 is an asset class that the markets believe in, and then yet the prices are going down. The usage is either stable or going up. It's kind of an inverse relationship that doesn't really make sense. And to your point, the hyperscalers, their business model relies on IPv4 leasing. It doesn't matter how you put it, right? They're giving you a machine, some sort of hosting space, but you're still leasing the IP addresses with it. It's just it's just disguised in a different, I guess, form or flavor. And their whole model relies on V4 and the growth of V4. So the prices basically falling in the last couple of years, I think, are just a reflection of strategic timing or strategic, positioning of offers. But the requirement for IPs has not gone down in the last couple of years in terms of like the number of IPs being transferred and used. That number is stable or going up.
Well, and to your point, Vincentas, I mean, you pointed out that Jake pointed out that the cloud providers are making money from leasing out IP addresses, and you pointed out the enormous, high lease rates, which might be hidden by saying 0.05 cents a minute or something. But when you work it out, it's about $43 a year, which is a lot more than you would be able to lease addresses for off of their platform. So, I think that since these cloud providers do have a provision for bringing your own IP address block and using that instead of leasing their addresses, that should drive some traffic until it gets to be too much for the cloud providers and they maybe remove that program.
Again,
but BYOIP though, they also increased the price of BYOIP.
No. You mistaking with a few things that I will explain to you. Please. But bring your own IP. The normal bring your own IP is free of charge.
You're talking. So they specifically was with email, like the email marketing.
Correct. Yeah. Correct.
It's still 5 or 6 times the price as as compared to using their IPs.
Yeah, but probably nobody is using that service. That's why.
I mean,
or perhaps we get a lot of abuse reports that we need to handle. Because we
well,
specifically pointed out an email, bring your own IP.
Yeah.
I would
Yeah.
also point out that there's been a dramatic change in the leasing market due to the advent of RPKI. That makes leasing a lot safer. It gives the owner or the owner's representative a lot more control over leasing. And the more that
Yeah,
grows, the more leasing is viewed as reliable. And
but I can tell you one thing. Which is very sad to me. Like North America, very well covered with RPKI. Europe is excellent in covering RPKI. Then you take Asia, Pan-African region, nobody's ever heard about RPKI. And it's a sad story, because I think that's really beautiful protocol, where you don't you basically getting rid of those PDFs, and you can automatically remove the announcement instead of communicating with all the peers, that are still keeping, the subnet active, on their network. So yeah, I think that we definitely have to push our PKI adoption more heavily, and I definitely want to dedicate one webinar for PKI because it's a really good thing to have across the globe adopted 100%. Um, but we also having a broader picture. If you look at the whole history of IPv4 pricing, you actually can see that pandemics made the spike. And looking deeper into pandemic period, I noticed that it was such a demand for all those digital transformations. We got Zoom appeared in the market during pandemic period, and they needed a lot of infrastructure. Everyone was scaling, Shopify was scaling because, well, if you work from home, then perhaps it would be good to have your own online shop,
right,
because I'm at home, right?
yeah,
So everyone was crazy scaling, and it all came down to the hyperscalers that actually were hosting all those services and systems, right? So I think this is where we had this huge spike of the prices, of the demand of IP addresses. And now I think that everything got back to normal. And there are, of course, other bits and pieces that help keeping the prices low because only a few players are there in that market.
yeah.
And
I mean,
that
I
comes
definitely
down.
think that, especially in the large block market, there is intense buyer concentration. And, when you have just a few buyers and many sellers, um, prices are going to gravitate downwards just by the nature of it. And, when the
Why
few,
do you think so? Why do you think so, Mike?
well, because just imagine, well, imagine if you were growing wheat in the Soviet Union. Well, there's only one buyer of the wheat in the Soviet Union, and that's
Mm.
the government. And they're going to tend to push the prices down. There's another example. In the States, we used to have things called company towns, where one company would set up a town, set up a factory, build housing for the employees and a company store. And then everybody in that town would work for the company. And
Mm.
historically, what happened was their labor wages went down because labor had no competition. It's the
No
same thing
competition.
here. IPv4 sellers, there's no competition for buyers of their product. So they have to adhere to what the buyers wish. And of course, the buyers always want lower prices.
Yeah.
And I think that drives a diversion in prices between the large blocks and the smaller blocks, because there are many more buyers in smaller blocks.
I think there's also something else to point out, Vincentas. I wanted to point out what happened during the pandemic. Yes, the work from home caused a massive increase in traffic, right, and demand for IPs because people needed to get online. But there was also two other factors that caused prices to increase. There was another program called RDOF funding, where the U.S. government released $20 billion at that same time. And then also at that same time, because of the pandemic, a lot of the suppliers had to focus on, their contingency plans to get everybody online. So they stopped readdressing, they stopped bringing assets to the market for a period of a year or a year and a half until they took care of, what needed to be done in order for the company to survive. Then they all entered the market roughly around the same time, where the demand kind of started to taper off, which is kind of what caused the prices to stabilize and then start to fall. Everybody saw the prices doubled. They had control over COVID contingency plans. Then they said, oh, wow, this is a huge market that has a lot of upside for us to make money. Let's start readdressing again. And then you see a lot of players enter the market in 2021 at the same time and flood the market. Mm-hmm. So I think there was a couple other factors that caused the massive spike. And then those same factors then cause it to kind of dwindle down over time. And it corrected at one point. There was a correction made, which made sense, but then it continued to go down because of what Mike just mentioned.
Mm-hmm. And to that point, we definitely have to touch about the policies, because policies is one of those things that actually I'm publishing a new article about the justification, which is going to be published next year. So
I look forward to reading that, but I do believe that the justification requirements and the holding period requirements militate against institutional involvement, because an institutional investor doesn't want their money tied up and to be prevented from selling. In North America, it's a year. In Europe, it's 2 years. In Latin America and elsewhere, it's even longer. So the inability to resell what you're investing in is one problem. But the larger problem is that you can't even invest in it unless you already have a large network to justify that investment. So this
disclaimer, this is for Aaron.
This is for Aaron, also APNIC, also LACNIC, also AFRINIC. So every place has some restriction. In right, you can avoid the needs test, but then you have to hold them for 2 years, and that's a risk.
Yeah.
And but the needs test is the primary inhibitor of institutional involvement, because it restricts those who can buy addresses to those who already have large networks. And the natural response when, say, buyer concentration leads to an artificially low price, well, then investors will jump in, take advantage of that low price, and change that low price through their investment. But they can't do that because they don't have a large network to convince Aaron that they have the need for the addresses. So it's policy that has shaped this market into one of extreme buyer concentration at the large block size.
But for the audience that actually don't understand what is policy, or let's say, I want to rephrase the question: who drives the policy?
Well, it's supposed to be.
The answer is community, sure, but
it's supposed
who really
to be
drives?
It's supposed to be the community, right? And unfortunately,
And what is community, Jake? And what is community?
Community is all of us. We're part of the community, right? Anybody that owns an IP address or that pays a due in Aaron, Ripe, APNIC, LACNIC is part of the community and has the right to shape policy. But unfortunately, like any other market, there's the dominant forces that have a large influence in those communities. As an example, the banking system, right? You like to think that it's fair, but there's a few large banks that control everything and they're too large to fail, right? We saw this happening multiple times in the last 20 years. That seems to be the case in the IPv4 market. I did want to mention something though. I think the needs-based testing is important. The reason that was created was to ensure that IP addresses were put into the hands of companies and organizations that needed it in order to continue building the internet and growing the internet. If you let everybody buy IP addresses, then speculative purchasing becomes a problem, right? You take the
yeah, and I agree with you, Jake. Actually, I think that that holding period is kind of giving you the set of rules that, or let's say, it sets the intention that you definitely gonna use those IP addresses. And to your point, Mike, that institutional capital has a risk with holding period. They might not, because the institutional capital might help to unlock the IP addresses to the market for the companies that need them.
Yeah, what I'm saying is you've got an asset class here that is different from many other investments. Like, for example, whether it's silver bullion or pork bellies or whatever commodity it is, there's no restrictions on, who can buy it. You already have to, show. There's no real restrictions on who could buy it, when you can sell it, what you can do with it. And to Jake, I'm saying that the price of the IP address is the conservation that was behind the principle of needs tests. So if you're a community and the stakeholder community and you want to grow the network by giving out IP addresses, the logical way to do it is to make it free. Everybody gets them for free, but only if you're actually going to put them to use. That's how conservation worked and paired with growth. But once IP addresses weren't free anymore, that didn't make any sense. And that's why in Right, for more than 10 years, they have no needs test, and they have the most vital IPv4 transfer market. The conservation itself is provided by the price. Nobody buys anything if they're not going to use it. Nobody buys things to sit them on the shelf. And as far as speculation goes, speculation has a role. It's not always a negative role. Sometimes speculators lose and lose big. And the rules currently not only prevent speculation, but they prevent any entity from placing itself in the market as a distributor of IP addresses, holding an inventory, a reliable place to go with reliable pricing, reliable transfer mechanisms. If you wanted to be such an entity right now, you'd be hard pressed to do it because you couldn't buy the addresses for your inventory. You couldn't resell them if you bought them without a needs test. So there's no place for a real distribution channel to evolve, and it's all a result of policy.
Well, Aaron and Ripe and APIC want to be those distribution channels. Unfortunately, they're not.
They can only get addresses.
Well, I can give you the data. I always love data. So in IPXO's IP transfer statistics, I see that this year Ripe gained nearly 9 million IP addresses only through 2025. LACNIC lost 7 million IP addresses, and Aaron lost 1.8 million IP addresses. What that picture tells us, I'm not saying about APNIC because APNIC is more or less the same. AFRINIC, they don't have RRI policies, so no need to count them in. But what that tells us? That tells us that the policies at some point are very restrictive.
It shows that policies can be incentives, and rights policies.
Exactly. Yeah.
Yeah, rights policies are incentivizing other regions' address holders to move to right, and there are
Yeah.
two big components to that. One is that there is no needs test at right for transfers, but the other is the right membership payment plan, which, if you're a large address holder, it is much less expensive to register your addresses at right than it is at any other registry, because right has a flat fee for membership. So there are incentives for registry shopping, which are being realized in the form of addresses streaming out of other registries and into right. And the other registries should recognize that and consider adjusting their policies to maybe incentivize a return path. One thing I will point out, though, is that in ARIN, it's actually cheaper if you hold just a /24 or /23. So theoretically, people might transfer from right to ARIN to save money, but it's only very small blocks and it's not much money.
You know, I wish that the world will be a much simpler place to live in. So now, if we look back a bit and go back in 90s and early 2000s, when the registries were established to basically request for justification of every single allocation. That was the case because they were giving IP addresses. They realized back in 80s that, oh, we actually give too many /8s to single, organizations, and then they actually did a great job introducing the registries, which is good. But in my view, and running IP leasing company and the way how you should be compliant with all those policies, it's already outdated. It's irrelevant. Those policies are irrelevant, in my view, for several reasons. First of all, IP addresses now, most of them were allocated to the enterprises, to academia, you name it. And they want to move freely those IP addresses because the BGP protocol was developed to move IP addresses anywhere you want. It's not policy attached. That's one thing. The third thing is that, in my view, all what we have to have is a beautiful technology, ledger-based technology, where you are able to see. That's actually, very good example, a Bitcoin ledger, where you see which wallet holds how many Bitcoins. The same example could be taken for the IP ecosystem, where you actually have a ledger and understand which company is assigned to which resource. That's all.
Well, that's essentially what Whois is supposed to be. But of course, Whois is split up into 5 different regions, and it would be great to have that kind of a registry, almost a property registry or a stock exchange or something, some kind of more rapid way of transferring IP addresses globally. And as you say, any IP address can be used anywhere. There's no boundaries in BGP.
Exactly.
But
and looking at the whole infrastructure and the way the whole setup right now is spinning, 60% or probably even more, internet's bandwidth is content, and they need edge locations where they could cache the content for, frequently used content to those edge servers. And, the content itself has no boundaries until we set those boundaries, basically, right?
Yeah, that's true. They're just bits, and the bits just have IP addresses, and they fly all over across boundaries until there's some kind of artificial constraint on them. But just going back to what you were saying about the stakeholders and the policy is old. It's outdated. It's an artifact from a different allocation scheme. But although what Jake said is right, we are the stakeholders who govern the internet. And you don't even have to be an address holder to participate in policy development. Unfortunately, even though the barriers are low, I don't know if there's 60 people around the whole world who really are actively involved in policy development.
Mm-hmm.
That might be a generous number. Every registry, and I've been at all of them, are dominated by a handful of players, mostly longtime people there. And they can shape policy for hundreds of millions or billions of people. They're not elected. And it's a very closely held and cliquey sort of structure to be governing something as important as the internet. So let me just say that, if anybody thinks that policy should be changed, they can get involved. Everybody anywhere can be a stakeholder in governance.
Mike, but we have also to set the expectations for the guys who actually why we don't see any new fresh blood in the policy making ecosystem. Because first of all, why they should care. That's like first thing. The second thing is it's barely impossible to change anything.
Yes, we both tried and failed. Yeah, policy is hard. It's hard to change, and I think some of that is due to the close-knit structure of the elite of every RIR and their longevity. And so that longevity leads them to have a more dated view of things and less of a current view. And I think it's apparently it's tough to get policies changed. But some things might drive those changes that we're not even really aware of. For example, leakage from one registry to another, if that gets to be pretty large, well,
yeah,
there's some
that's true.
self-preservation incentives.
Or any how to put it, can I use this word, dodgy things happening inside of registries that they nearly blew up?
Yeah,
That's
dodgy,
also
yeah. Yeah, I mean, the registries have been diverted recently in creating a new document that deals with the creation and decertification of registries, and they've been quite distracted with that. But I think the policy needs to be changed. It is kind of hard to do that, but I encourage everybody to get involved.
My only one thing I wanted to add to this policy, I think the policy is not as bad as maybe some others might think. Once again, I think needs-based tests are fine, though it would be better maybe perhaps without them. I think there's still a need for it to allow people who want to build internet to continue to build internet, right? And not have to be held hostage to pricing in order to do it. There's a good reason why the needs-based test exists. I think my biggest problem with policy and needs-based testing is it doesn't allow for healthy competition to come in for people that actually want to do something with the internet. As an example, leasing IPs. Currently, some registries allow that as needs-based justification and some don't. They should all come together and say, we allow it. Why do we allow it? Because you're essentially doing the same thing as a large hyperscaler, right? You're leasing IPs. Granted, you may not have a massive network. Well, maybe you don't have the resources to build, large networks or or lease space in data centers, but you still want to participate in the process of leasing IPs. Well, that shouldn't be seen as a negative, right? That should be seen as a positive. You're willing to put down capital to then allow other people to lease IPs to continue to build the internet.
Enable,
yeah. The internet, right? So that's my biggest problem with policy is not looking at leasing as a viable business case or justification for acquiring IP addresses, when in fact it really is. It's just one small technicality that makes it different from, being a hyperscaler or a cloud provider.
And look, don't get me wrong. I also support, having policies in place. And by the way, being in this policy world, I met very good people, and including you guys. So we can say that policies connect as well. But I think that, what I'm actually looking is, when we started IPXO, no one believed that we will spin out this platform. Everyone was calling us abusers and then whatnot. But again, from the policy perspective, what I'm looking is from a broader perspective. How we can get some sort of universal policies, how we can get a common sense on the things, how today's internet operates, and all those bits and pieces. Because right now, we have policies that were introduced in 90s, but the internet is so miles away with the technological advancement, that those policies at some point, when you try to develop some solution, seems irrelevant.
Yeah, in particular in Aaron is that requirement for a circuit. That's where the needs test gets bogged down. Like, if you need to have a circuit from the address owner to the recipient. And
that's,
I mean,
so
like,
old.
And thinking,
Yeah, exactly. And if we talk about the around the whole registry, turnaround time, the ticket load and all that, I think that's all could be automated. All could be automated.
To an extent. To an extent, there are some bad actors that try to sell IPs that illegally, right? They'll create fake companies that mirror company's name, act as if they own it. So there's definitely still a portion of that that's very critical, which is,
But this is like more legacy or not?
No, not even legacy. They'll just see a company's been defunct for 20 years. They'll start a company, it was something corp, and they'll say it's something corp period. And then you have to look into that. You got to see that it's not the same person. And we've come across that multiple times. So we're huge, partners with Aaron, and they really enjoy working with us because we do this diligence well in advance of a transfer, a chain of custody transfer coming into their ticket system. So we prevent a lot of these from even occurring, because we'll reject the customer and say, look, you don't own this. You don't have the proof that you own this. It's not going to get through. So, right. But I think maybe 75% of it can be automated. I agree. But then again, Aaron also has they have lack of resources as well, right? Just keep in mind, they're not for profit. So there's a fine balance. And by the way, they don't charge very much, right? They charge $5 per transfer. They've recently increased their fees in the last couple of years. Everybody kind of thought maybe it was a little too much, but really they needed those resources in order to keep up with the demand of transfer requests coming in.
But the counterpoint to that is LACNIC, who charges much more as a transfer fee and is much, much slower to process transfers.
Well, that's the reason why they cost so much, because it's not that they don't know what they're doing. They have a very archaic system that requires physical mail, signatures. And honestly, we've performed several LACNIC transactions over the years, and it took, up to a year. One of our transactions took a year. Most of them take over 6 months. We've been recently in contact with them, and they said that they've changed some of their systems, and we're actively in a lactic transfer, and they assured us it would be within a month. I think that's a little optimistic, but we're aiming to see what happens here hopefully within a 3-month transfer timeline. We're there to help them, right? But yeah, I think they charge so much because they have very little activity, and it's a lot of resources used per transaction.
Yeah, I think we can agree that there's room for improvement there, though, in the 21st century to get these transactions done a little bit more efficiently.
But at the same time, Lightning forbids IP leasing their own resources. That's why, a lot of resources from another regions are actually getting announced to Latin American networks. But that's why also Lightning is bleeding. Lightning is bleeding, and they're gonna bleed big times if they're not gonna try to soften the policy on leasing.
Well, what we found was LACNIC transfers that leave LACNIC and go to another region, they finish faster than a LACNIC transfer within the LACNIC region. And that's like unheard of. Interregional transfers just everywhere take longer.
Wow. Okay. That's interesting. Hey guys, I see that we have a very great conversation. I think that we can carry on talking
for days.
like we always do. But a few words, Mike. What as a summary, what do you think? The next year looks like for IPv4 address and technologies surrounding it?
Well, I see a constant, incrementally slower increase in IPv6 deployment. I see there's not much lower that IP addresses can fall, at least in the big blocks. I certainly think IP addresses will tick up in value next year. And, hopefully we can get prices back up above $20, which would put us kind of in line with the pre-COVID pricing.
But what about the other things, like things that we discussed from the policy perspectives, the things on IPv6, broader?
Well, broader, I think that, broadly, I don't see anything really happening in policy. There's, like you say, there's a drive in policy against leasing, and there are policies pushing leasing. That might have a small impact, but really, as long as the shape of things is roughly the same, I don't see any kind of new technology coming in that's going to require IPv6 or drive its penetration. I don't really see any gigantic new technology coming except for AI. And so far, we haven't seen a dramatic impact from AI. Maybe next year, when some of the planned build-outs get completed, they'll start buying IP addresses. But otherwise, I think it's probably going to be largely the same.
Jake?
Sorry, can you guys hear that sound right now?
Yeah.
Sorry, they're doing some testing in my building. Anyways, that's a warning that you got to buy IPs now because the prices are going to increase. Look, I think as a company, we probably do ourselves and maybe one other company. We do a lot in terms of volume. Probably one of the largest in the world in terms of number of transactions we process every single month. So we're seeing the number of transactions increase. We're seeing the number of large subnet transactions increase. We're seeing the demand in Q1 already increasing. So in terms of where's the market going, it has to stabilize next year. It's showing signs of stabilization. Vincentas, just like yourself, I'm huge in data. We put out a blog every single month about the transfer market. The transfer market this year in Aaron has been absolutely the most stable we've seen it in years. Previous years, you would see transfer requests go up, transfer requests goes down, like significant drops. But what we've seen is as a stable number was around 150 requests a month in Aaron. That has been the exact average this year, give or take like 5%. That's a huge indicator for what's to come next year, which is stabilized pricing. But with BEAD hitting the market, demand has to increase. AI growing at the rate it's growing, we feel that it's going to increase with AI's hyper growth. So just like Mike said, we're anticipating that prices will likely increase 20% next year on average. So mid 20s is certainly not out of the question. And I think personally that supply will be far more scarce next year. Specifically in the market of /16s, because so many were purchased this year at such low prices.
Yep, and I think that looking from the whole perspectives where the technology is heading to, well, the whole thing around. How fast those networks were gonna scale, we're definitely gonna see a demand for IPv4. Well, sad to say, but I don't see anything for IPv6 next year. And we actually give free IPv6 to all of our customers. Guess what? Nobody's or rarely taking it, and it's kind of a natural thing when you have a kind of I should call product IPv6 that was designed, with that the bridge, the bridge connecting IPv4,
Yeah.
So yeah.
Also, I wanted to mention this is a kind of a little interesting poll we take every year at the end of the year is where are IPv4 prices headed next year. I always put it up on my LinkedIn. It's up for, I put it up 2 days ago, so it'll be live for 2 weeks. And I want everybody that's on this podcast to participate in it. I don't know if Vincentas, you could put a link in there, but we want to see what everybody else thinks is going to happen to pricing. And so far, overwhelmingly, people think the prices are going to increase. We've had about 40 votes. 85-90% of them are saying it's going to increase, and then a small percentage are saying it's going to stay stable, and then almost nobody's saying it's going to go down.
There you go. Very good. Okay, guys, thank you very much. This was our last webinar for this year. Merry Christmas and Happy New Year to all of you. Was off the hook a year, really great. I mean, the whole thing, ecosystem shaping beautifully, and I think that we definitely gonna see an interesting conversations and interesting events next year happening in the world that we are living in. So,
well,
see you
Merry Christmas to you.
next time.
Happy New Year to all of us.
Yeah, likewise, everybody. Thanks for having us again, Vincenta. It's always a pleasure.
Thank you very much, guys. Always a pleasure.
All right.
Thank you.
Take care.
Bye.